Hello, hello. I'm sorry about that. Hello, hello. Good morning. Welcome to another ES Futures trading stream. Today is Tuesday, May 13. It is 8:35 a.m. Eastern Time in the US. CPI has just came out. There was we have a spike in the overnight. We have a spike to the upside. We have a spike to the upside. We have a high that has made in the overnight, and it is very close to the 200 SMA here. This is an important reference, relevant reference. It is something. This market. Let's take a look at what happened yesterday. We have a gigantic, right? Tremendous gap we have yesterday, in which the market broke out of this inside bar. We have balance, 2-day balance here, inside a 6-day balance. This is a 6-day range. Even though I can see only 5 here, right? But that's because of the setup of these charts. But actually, as you can see here, this is 1, 2, 3, 6. Actually, this is a 7-day range, not 6, 7-day range. And the breakout, that range is to the upside. You can break out of this inside bar, break out of the range, or the 7-day range to the upside. And now we have this this gap, right? I wanna highlight this gap. This is important, very important. Number 6. There's another one here. This is the high of the gap. 6 again, also. This is the distribution close of that overnight I was using for yesterday. We have 2 distributions during the overnight. I can talk about that in a bit. And the low, right, it's very questionable. When the market opened yesterday, way up here, as you can see, way up here, we have a sell-off coming because the overnight inventory was extremely long, right? Notice what happened. Had tremendous amount of volume, almost 100%. Maybe this would be, how much is here? 500, almost 100%, maybe 90% higher than the previous day. Telling me that this probably is more than just a counteraction here. This is more than a counteraction here. Next thing as well, more than a counteraction coming here. But after that, the market just didn't have acceptance and was both from the 100 SMA, almost to the tick, right? This is an indication that whoever's doing the buying here is not relatively strong, right? But momentum is behind it. Now, after that, this as well, the next thing I have marked here in my chart is that this level here this one here G low was exactly, almost exactly, half back from the range, but which was at the range, which was at the time the range, right? The center of this range. This is A high, C low, and this is kind of like 1 tick or 2 ticks from that. This is very questionable here, and all of this advance the market had after that, right? All of this advance the market had after that came from this reference. Again, after that, at the close, M low coming to another reference, right? The 100 moving averages. Why I have different moving averages here? Because I got these adjusted and non-adjusted contracts here. This is something I need to do, right? There's a set of traders that will look at this one. In this chart, for example, I have the 100 above the 200 here. But if I do the adjustment for contracts, notice what happened here. Now I have the 100 below, right? Who is going to watch what? No idea. Right? One set can be looking at one. The SPY, for example, has the 100 above the 200. The SPY hasn't crossed these ones yet. You got the low, the way down here. Notice how in the SPY, for example, we have, what is this? I think this is not here. This should be maybe here, right? I think this is more likely here. Look at that one here. I have this channel, and the market keeps trading, keeps moving very close to this low edge, right? You look at how it was, how we kept some breakout range, about exactly from the range, another breakout exactly from the range, another breakout. You know, can you see kind of like a pattern here, right? I'm not saying that this is that I'm going to use this for trade. This is just another piece of information that I'm using, right, to see who is behind this. Last week we closed the week with the observation, right? But this is a 6-7 day range here, and anything can happen here. The same, there was a lot of expectation to what could come from the meeting between China and the U.S. envoys in France. What came out of that was positive, right? Hence the gap here. That could have, nobody knows what can happen. That could have been negative as well, right? And this one, the structure is very weak, and this high was made on news. This gap was made on news. And notice something here. And this is the next thing that I have. First, before going over there, we have upside. You know, have a change in the monthly, in the bigger time frame. No, it's not downside anymore. We are back inside this. We have 1, 2, 3, 4, 5. We was there, and now we're coming back inside this 3-month range, which put this 58.13 as a reference, right? I'm going to call it 58.13 as a reference, which is this one. Actually, yeah, that's why I decided to keep this reference here. Notice that. Right? Now, what I wanted to show is the weekly. What is in the weekly? We have something that is, I'm going to, something that is not usual. And when we have these kind of things in the weekly time frame, these gaps here the weekly has are I would call maybe an aberration. We don't have this kind. The markets don't have this kind of gaps in the weekly, and when it does, usually the market closes those gaps relatively fast before doing whatever it has to do in this. But before whatever it has to do or whatever it's doing at the time. Now, remember that this gap was made based on news, this trading news that we have coming from Europe, the meeting between US and China. News-based advance usually can or retrace it relatively quick. So have a gap here, have a range here that's leaving, coming inside this 3-month range, which puts this 58.13 as a reference. Those are my main references for today, right? The 13, the weekly gap below, and coming from the overnight trade, the upside spike. Now, notice what the market is doing now, where this spike came from, or what it did now. I don't know where it started, but notice where this J low is. Right? You can use this, or if you want, if you have Sierra. Let me duplicate. Let me bring a duplicate. Let me duplicate my chart. I know I can duplicate my chart. Okay, duplicate chart. So I can bring it up as well. Sierra is a very nice charting platform as well. I have the same reference. I guess it's a matter of getting used to one or the other. I am pretty comfortable with both now. I am still testing this one. I'll see if I make a change. The advantage that window has is that just look at this. Right? I'm going to show it to you. I mean, this is a cone, right? If I want to see the volumes here, for example, I need to update this. I need to request data, which I don't have to do in Sierra. But what Sierra has, I have it here right now, for example. Huh? I have it here. I don't have to do. Look, notice this gap here. Right? That's one thing. The cone. I mean, the advantage. I was talking about the advantage of window is in Sierra. I have these profiles here, volume here, daily volume. That is the overnight totals. Right. Window, I can have it here, everything all together, right? I have the choice of just choosing yesterday, for example. I could erase this week or the month, right? I don't have in Sierra. I have the choice to look only at the previous day. If I don't see the previous day, overnight, I can see the whole thing, right? They don't give me the option to see yesterday, the week, or the month, or everything else, right? It is one or all. One, none of all. Also, I don't like this the way how these profiles are. For example, the overnight, you can see this is bigger than this one, which is if we do a close up here, you see that's this. You have 7,000 here, for example. Over here is 25,000. I think that's not good, right? This is better this way, for me at least. I can zoom in and zoom out really easily here. If I want to check my histograms, my daily histograms, I have to use in Sierra. I have to use these bars that I configured to make it. These are number bars. Sierra call it number bars that you can set to whatever time frame you want, right? Market profiles have 30 minutes, but this one's is 30 minutes time 12 or 13, which is the number of periods that we have total in the day. Right? What matters to me is just the shape. Just the shape. Where the concentration, what I want to see here is where the concentration of volumes are. Notice, for example, that when the market opened yesterday, I have this period market, this volume market after the gap. So this probably, that has good also being used as a support. Some buy. If the market would have taken this area, the next thing on the lower side probably would have been this one, or maybe even the high of the 7-day range. But before going that far, what I do is I check these ones, and then I go to my daily, just my regular data that I have here, because before going over there I had this moving average. I also have the overnight distribution close, which was very important at the time. And the market was doing a lot of activity around the upper distribution of the overnight. That was for yesterday. Let me close this thing because I don't need it. I don't want to overcrowd this. And this is the one I'm talking about. What is the overnight? Let me hide that one. This is the upper distribution from the overnight, and this is the lower distribution, the distribution close, right? In between, I have held exactly at the 5,800, exactly the 5,800, which is for me an indication of really short time frame trading here. Not as short as daily or intraday, for example, but maybe daily, but with some kind of staying power there, because they can move the markets long enough to place this hardback, to move this hardback close to an important reference. But who has this reference, for example? Just short-term traders, short-term trading here. Now, going back to the to today, you have CPI. This seems that these are not negative news. Let me check what do we have. I don't care about that. Let's just keep checking this. We have an upside spike to the upside. Where am I going to call it a spike? I guess I'm going to call it this, the base of the spike. Either this one or this one here. One of these two. But the most important thing that I'm looking after is where the market opens relative to the spike. Open above, which would mean in this area above this high. Let's mark this now. Let's mark this up, for example. This is the overnight high, right? overnight high here, right there. This is just for practical purposes, just to talk about this. Is overnight high, this is the overnight low. Notice where the overnight low is. Overnight low here. You can see it right at the center of yesterday's profile. Right at the center. These kind of movements do not fix these references here. This nor this one, right? Even though the market has moved through, but this is the overnight. The overnight is, it doesn't have the volume. Look at the volume here, for example. Yesterday we have kind of like a 150, something like that. How much we have yesterday? Oh, never mind. 400K. My bad. That's not bad. But this looks like short cover to me. Look like short cover. Well, the market opening inside the spike is neutral. Right? But if it opens inside the spike, the market still have a positive sign, which will be opening with the gap, right? Gaps as sign of change. This would be, to me, market getting too emotional. Markets getting too emotional are also an indication that probably this is short covering, right? Just people getting caught short and buying to cover. But the upside that we have here, the length or the magnitude of this spike, tells me that maybe, the short covering is close to an end, and maybe we are actually done. But we never know. Short covering ends when it ends. Now, the next thing is the last scenario in which this market can open is opening below the spike, right? Below this level, or even below this one, which will be a negative sign. That will put the market back inside yesterday's range, which would be an advertisement for chop and potential, and also or high odds of being a rotational market that we will have, what we may have today. Right? Also, notice how the condition of the overnight inventory is. Overnight inventory is very, very short. We have 250,000. This period, the current period has how much? 37,000. Not that much. The accumulations of volume are down here, but mostly in this area. Can you see how much we have here? 6,000, 7,000 above this high, above yesterday's high. This one, even though has a lot of trading here, notice how many pillars we have here, 5, 10, maybe 15 wide. The volume is lower than the one we have here, almost half of this one. Right? So probably this could be a counteraction. The counteraction to the overnight short inventory may be in process. Notice the lows. There's a lot of lows around this mechanical references. I'm going to. I don't want to generate too much confusion here. Just want to put this gray as well. Right? And this is the overnight POC. And currently, market having like a distribution here, right? Notice what happened here. But very questionable low, spike low. And notice again, right? In the same way how, what is yesterday? And this is a typical trade, man, that happened. Typical movement, right? Notice how all this upside ends when this dynamic reference, which is hardback, gets close to some kind of main reference. Okay? That is what the market is doing. And notice what's happening now. Right? Where this hardback is now. Long enough, the market extends long enough to move these references, this hardback to this one here. So this low is very, very questionable. It doesn't mean I am going to go short. All right. Remember, this market generated information, and there is something that Jim has in his new book, and he talks about this also all the time, or multiple times, or constantly. He's mentioning this in his webinars or weekend updates. You know, sorry about that. Um, what he mentions is what is market generated information relative to momentum, right? Because market has momentum, we are watching or witnessing a market with momentum to the upside. While this happens, we are gathering information, right? So what he says, and I think this is brilliant actually. What he says, how he labels these two elements is he labels market generated information as the lagging indicator, right? And momentum is the leading indicator. I think that leader thing that he does there is key, right? It's so simple. It's really simple, but it just puts, I think this is like one of these Tetris games in which you have a lot of things that are going around, and it just puts everything in place. Find a way to align things, align the information you may have, and classify them, and gives you an idea how to use it. Because what can happen is, and this happens all the time, right? This is one of the things that he noticed, and I noticed also when I started with him, is once we start to see these things, for example, what's happening here, for example, right? What happened here, what happened here, or what may happen here, even here, is we are witnessing this thing, we are taking notes, and we may have, unconsciously, we may create bias. We may say, wow, but this market is really, really weak. The underlying is really questionable. The inventory is in weak hands, and this cannot continue. This has to fall. This has to break, or has to rally. And that thing is very dangerous. Just because I can see that the movement is being conducted by weak hands or by very short time frame traders, it doesn't mean that it doesn't have potential to the upside. It doesn't mean that it doesn't have upside. It will not have upside continuation. And when he classifies, right, when he labels market generated information as the lagging indicator and momentum as the leading indicator, that kind of like switch a light on in the dark room, right? You may not understand this, or you may have come out to this realization by yourself, right? But the fact that he did that thing is, I think it is, it can be underestimated, but I think that's brilliant. just say a word. I think that's brilliant. Now, my main thing my main piece of information and my main information is where the market opens, where the opening is, right? Notice this is setting up to open. You can open above, you can open below. Opening above, I am undecided to use this, either this one or this as the base of the spike. I can be here or I can place it here. I am tempted, since this is an art more than a science, I am actually favoring to use this I high as a base of the spike, as a base of the overnight spike, rather than this, because this is closer to yesterday's high. Just because, right? 512 high. This can be what 512 high, or it can be this this can make the gap close, for example. Right? Opening above this actually is opening with the gap, and not just with the gap, it has the potential to open inside the spike or above the spike. We're still 30 minutes into the second period, into the last period of the overnight. Notice where this K low is, right? Where J low is. J low here, K low, and what we have in the upper side, right? This now is becoming, we are very close to the 5900 as well. There's one movement. I don't know if I am too biased here, but there is something that I haven't seen in like years here, and it is this thing. We have this one or this one, either of this. This can be this or maybe this one as well. I haven't seen a movement in which the market opens, shoot its way up to this reference very fast, very quick. As it can be that one, or it can be this one, and then selling just comes right after that. Maybe overshoot a little bit. Maybe you can take this one and don't take, maybe not take. Oh, let me call this right there. Wherever the market opens, shoots here, maybe overshoot a little bit, fails to take this one, or maybe taking this one, shooting a little bit higher, and then boom, rejection. This movement I haven't seen, and this is such a significant reference. This one over here. If the market starts to trade above this, that would mean change. You will have seen, right? Change is already underway. Monthly has ended one time frame lower. Weekly is one time frame higher. The daily also is one time frame higher. So all time frames now are in sync to the upside. Everybody can see that. Everybody can see that. Everybody knows now that the market is to the upside. Everybody, we have a significant bounce here. Now, how much of a bounce? Let's check it out. I'm going to minimize this one. I'm going to erase this. How much of a bounce? check this out. We have a 20% rally. Something that I wanted to do here is how much is I got a note. How much is this low? 4867, right? All right, let me do something here. 4867 and the high is 6166.25. 6166.25 divided by 4867 give us 26%. Now I am going to have 26%. This break from here to here is 26%. Right? It's 27 from here to here. We have here. Now I am going just because, right? I want to know where is this. Oh, come on. Let's do it again. Divided by 4867. I want to know how much is from, come on. Clear, 6165.25 divided by 4867 times 48. $67? No. This cannot be right. This is how much we have. How much advance do we have here so far? Well, 67 will be up here, right? Right now, 20%. Okay, let me check. 48, 67, 61, 81. It actually is putting this now is inside, really. It is one thing. Never mind, forgot what I said. I have a mental lapsus there. Let me check something here. Look at what we have here. No excess on the upper side, right? 3 months high, very close together. Coming market, I want to extend this range to the right, which gives us this low, actually yesterday's low, right? Do I have that in my charts? Oh, it's here, 16-week range low. Okay, let me highlight that. Okay, it's highlighted here. Let me highlight in my Sierra charts as well. I'm not saying the market is has to come down there, but it is an important reference actually. This is very important. If there is anything to the downside, since the market's in control of this kind of trading, there's very mechanic, systematic. This can be an important reference actually. This one here. Now, because we are inside this range, this one here. This is a 16-week range. Upside continuation have this one as the next. Why I have this one here? No, this is not good. Remove the, has nothing to do here. This is the one. This could be the next thing, if there's any upside here. And why I say that? Because they have a 16-week range here, and this break that we have in the market that took the whole year out, basically, has this in this range, this inside range, as the next area to monitor on the upside. I don't know why I have this red thing. Let me remove this thing. I don't think this is relevant anymore. Right? You have this 4 or 5 week. There's a breakout, comes back inside, is rejected. This upside could check this one, didn't check it. Now the market may come back up here and might test this one. And remember, this is the weekly time frame. I'm not saying that's going to happen, but this is part of the job, right? This is part of the homework. If the market keeps going higher, I have something in the background that I can monitor, and that's why we do homework, right? Everybody now is looking to the upside. You can see that, right? There are people that was selling here, 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 selling yesterday, selling here, and finally, right? Everybody agrees now the market is going to the upside. When that kind of things happens, that's when I become very aware. Okay, the same thing happened also to the downside when the market was coming down here. Everybody, right? Everybody was on the same page. Everybody agreed that this market is really bad. The economy is going to fall into recession, and at the end of the world is going to be tomorrow. Everything. When something like that happens, when we have consensus about something, that's when I become very aware, very alert, right? Very alert of what may happen ahead. I don't have any bias right now. I have learned, I think I have learned to face the market with this mentality. But I don't know. I have no idea what the market is going to do. I don't care what the market is going to do. My goal, my objective every day is to try to understand or try to figure out what the market is doing actually. Okay? I have these things in my charts. And this is very important to me. This is very important from yesterday. Sometimes it's just too much information when you have a lot of references, a lot of data here. It can be overwhelming sometimes. But with time, you learn to ignore some things. I may have some extra, some some levels market here, but I am monitoring the market at that moment. Right? When time goes by, I may just pass by. I can delete or I can leave it there, but I am actually ignoring many of these. And this one, for example, this was very important at the time. This 5% pullback from the highs. There was a lot of trading around this pullback from the highs. So if that happened when the market was going low, but I should expect something like that when the market is going back higher as well. Now some back and forth from this area, a general area at which the market is right now. Also, we have a POC, overnight POC that's below or inside yesterday's. The market still has an upside. This may not be relevant, but also this is in the upper side of yesterday's. So this could be revisited. There's another thing that if we would have, for example, POC up here above yesterday's with everything going to the upside, that has more odds. Right? That has more odds of being revisited. Now, the lowest odds scenario for this kind of POCs being revisited is when the market is trending higher and all time frames are going to the upside, and this POC is before or below previous day range. That's the scenario in which this kind of references have the less relevance or the less odds of being revisited. There are some odds here. I would consider medium odds that being revisited. If it doesn't, I will keep this market. Right? I will keep this market. I will carry on. I'll carry that information for some maybe for the rest of the week, for the current week. Something important as well is we have really high volume yesterday relative to the previous day, and something that I monitor really close is what's happening in the bond market here. Crude is recovering here. Dollar also very close to this movement. This high is very questionable here. But look at what's happening with the bond market. This is something that may uh, set away, may drag the advance, or put the advance at risk. Just look at this, man. This is a critical level for having a gap here doesn't speak well. The can target maybe this low, maybe this one. The other thing, the other market that I usually follows is this one. Notice what's happening here as well. It's coming from the trend. This is a trending market to the downside. We have a range here. Right? We have a range here. This can be something really big or important. We may have this market may come down here, right? Come and then shoot this way up, or come up here. And this scenario, especially, if this one joins this one as well, can drag the market lower, or can reduce the upside that we have in the equity market as well, in the cash market, in the equity market, the stock market. All right. What else? I guess. And as I say, this is the channel. Still, look at where this is. No, I call this no man land here. This dead center of the range. Right? The potential destination is the upper side. Look at where this upper side is. Really far from this moving averages. The market will need to have a really good high advance. It has been getting close. It has moving closer to the lower side rather than the upper side. So I would expect maybe some sideways trading, and the market keep going higher, following the lower side of this range, this trading range. Very questionable, very questionable, as we say, as we explained before. Okay, so that being said, I think we have still 8 more minutes before the opening. If you have any question, please let me know. I will get ready for the opening. I will take a small break. I'll come back right before the opening. Alright guys, see you in a bit. All right, all right, all right. Well, just moments before the seconds before the opening here. Look at that. Look at that. Look at how the gap has been closed. Market open. Market has opened. Below. How is it below? It doesn't. It be open below the spike. Inside the spike, man. It opened inside the spike. Many times the mistake we made is we wanna act right away. I wanna buy this market, sell this market right from the open. Take your time. Gather some information. Sometimes you have to do that. But as we speak, this is not good. What I'm seeing here is not good. Notice that this is the first reference, first thing on the lower side. That's how dries, the action dries here. Markets to the upside. Hardback is J low. J low was previous period hardback. This is, I would consider J as part of the regular trading hours. Because traders are out there for this kind of events, news events, like CPI, right? Notice how it dries, but volume is accumulating in the lower side. This could be a counter action. How is volume? We have really low volume relative to yesterday. Okay. It seems like we have seen the end of the current counter action. There was a movement to the current action, movement to the downside. Look how it ends, but there's a nuance here, right? The nuance is you have higher volume here. It seems like there is more to the downside here, but we'll see. We'll see. Notice how volume is accumulating in the lower side. There's pressure to the downside. If this trading does not have downside continuation, we can see some upside here towards maybe the overnight hardback or towards this reference up here. Remember the movement that I have, the movement that I say I haven't seen in years, it didn't happen. So that scenario is just gone, right? This is not good, man. This is, I consider this not good at all. But if I got a short here, for example, which I don't, right? As soon as I see this kind of numbers, like I have single digit here, a single digit here, and these matching ones, that's an out, man. That's an out. They might be something to the downside later to take towards this low, because you can see actually volume is building up to the downside. But right now, that's the end, right? It doesn't happen. Remember, all time frames are to the upside. The market opening inside the spike, which is neutral, right? It's not positive, not negative for what we are having here. What we have seen here is what we have seen up here. This is the spike in the overlay. Right? This is what this is. Each charting platform has its advantage. This is the advantage of Sierra. I can see it here. I can see it here, for example, right? Right there. This is the end of this upside. Not that it cannot go higher, but if I have some sort of position there, targeting the upper side, if as soon as I see something like that, that's close. Either taking a loss or taking profits or whatever, that's the end of the upside action for that specific moment in time. Notice how what is happening here. Do I have overnight sessions? This is not good here. I did something wrong. Extended? No, it doesn't show extended hours. Why? I have this one. You can clearly see that it hasn't taken the overnight high here, but this isn't daily time frame, but you can see here. Now has looked inside yesterday's range, has been rejected. Notice how okay. Look at this. Look at what happened here in the lower side. The current action, but what we have yesterday. We have an action to the upside that has not been completed. Regarding yesterday there was no reason whatsoever to take any short here, or at least for me. All right. Well, I do have on the side. I think I always, if I want to do some kind of stream, I need to have. I want to have my charting, my trading screens in one side. But I was having too much problems here. And this is what I have. This is my this is another screen, right? This is what I have. This is my market profile. Right, this is the current period. I will have my daily time frame here. My daily profiles. I will have a consolidated profile and split it here. This is the current period. I will have the next period here, the next period here, and so whatever you have an idea. And why I had this is to see, just to see this this period here. It's not that relevant actually. I really look at this, but this is what I'm looking. If I have a position, I want to see this single digits matching the volume. Okay, bid and volume match. Just to that. Okay? This is my options board, and this is straight futures. This is what I use the most. I was observing how this develops. All right, you can see this is a put. Okay, but just watching, I didn't do anything here. This market's to the upside. Okay, one of the mistakes that we do is traders try to fade a trending market. This market is trending to the upside. Momentum is to the upside. Well, there's no reason to go against that. Okay? If you are fading the market, trying to fade the market, fade the rally, the trend, okay, the odds of having some success there are not that good. Or I would say the odds are against you. If I short this market, the odds are against me. It doesn't mean that I'm going to go long. I just need to wait an opportunity, man. 58.9. This could be the potential destination of this 5,900. I have to confess I'm getting used to Sierra. Huh. That was something I didn't expect to say. And let me see how much is. Oh, the options that you have seen there were end of the week, and those are not today's options. Why I have 57? Oh, that was from yesterday, I guess. Yeah. All my trades yesterday were to the upside. Okay, this is what I have here now. God damn. This is what I have now. This is what I am observing here. 5,900, the 200 moving average, coming back inside range, targets this one. This is the first thing on the lower side, then half back, okay, and then this one is this one here. This market come crashing all the way back inside here, but as long as this low is not taken, this market is still to the upside. Okay, we have a trend to the upside, all time frames to the upside. Now the current movement may have seen the 200 moving average. God damn it! May have seen this current moving average actually here. This one here and this one at 5,900. Remember, the market is moving. I was using these round numbers quite a bit, right? This 59, this 59, 58, or whatever you name it. All right. Value, we have value higher. Huh, look at this. Have just noticed this. Look at this 2 day here. Oh boy, this is very low. I don't care about this. Disregard this label, please. Okay, I'm going to highlight this. I am going to extend this line here, just for you to see these highs here, these 2 highs here. These numbers here are from previous contract. This is March 4. So there's nothing here in the past that can have an impact on this one. This is all new. This is all based on the current contract. In June. Okay. Notice how this high here, okay, before the erasure, we still have 1, 2, 3, 4 highs here. I'm going to remove this one. I'm going to call it SPY. I guess SPY can see better. No, you can see right now we have 1, 2, this 1, 2, 3 here. Can you see 1, 2, 3 here? There's nothing in the weekly that can be used as a reference, and the monthly is coming back inside this. Nah, it's still inside this 3-month range here. I'll call it this. I have those ones inside. All right. Yesterday, you know, there are no 2 days that are the same. But you will see a lot of repetition here. There's something that happened yesterday. I don't know if I can show it. Maybe I can show it to you. Just a moment. Let me see. Let me see if I can show it to you. And that's the beauty of having two charting platforms. Let me see if I can show it to you. This is yesterday. Okay. Where are you? Where are you? Now I need to. All right, all right. Look at this. This is what I want to show you. I want to show you the opening period, which is quite different than we were watching now. Let me keep expanding this. But at the time, this is what I want. Oh, come on, man. It's taking too much time. All right, here you are. I cannot expand it more. Let me see if I can expand it more. Yeah, because there's something I want to oh, what is this? I want to show it up here. At the time when we have this thing, right? It looked really, right now it's too small to see. I cannot show it here, right? But you can see what I want to show you. You can see taper here. A higher volume get lower and lower and lower and lower and lower and lower, right? I don't see that today, right? None of these I have seen so far. The action to the upside seems that we are not down yet to the upside. The action to the downside seems that has not been completed yet. So this can go in either direction. I don't have anything here. I keep gathering information. The market has come as close for once. The market has closed the gap. Has looked back inside yesterday's range. It's being rejected. Has been rejected. Now it's building value higher, which is quite the opposite. And if you see the action of what's happening today, right now, as of 9:47 a.m., it's exactly. And this might sound counterintuitive. It is exactly the same thing that yesterday, but in the opposite direction. How about that? How can you wrap your mind about that? VIX is 17. Volatility is getting lower here. We are almost done, not almost done, we are kind of like 2/3 of the current period, or the opening period, so we may have a little bit higher than Friday, but definitely it seems like it's going to be lower than yesterday. Now, can you see this thing? This volume, some volume here. You have reds here, right? Don't forget about this. Don't forget about this overnight halfback. This is an important reference, halfback here. This is a non-revisited prominent overnight POC. All right. And this is the thing about trading, right? You just have to watch and wait. I need to. I mean, the market so far. We are seeing a market to the upside, right? Everybody knows that. Everybody knows the market. This is a market to the upside. This is a market to the upside. No, there's no other way around that. But if I want to be part of it, so I need to find location first. I mean, the first thing is, I want to see an opportunity. I'm not going to go long just because I see the market is over. I mean, have a gap, close, the market is to the upside, the market is going higher. Let's go. I'm going to buy here and put my stop one point or 2 points below. I'm going to risk $50. I'm not risking $50. I don't trade that way. That's not how I measure risk. And it seems, instead of using this chart here, I'm going to use, this is the lowest side down, the 200 is down here. What? Why I have the 200, what is this, 57.73. Okay, I'm going to have this, I'm going to detach, maximize this cell. Just to have it here. I want to have it here. I don't need to see this. The Dow is actually to the lower side. We have a one index that is going lower. So this increases the odds of rotation. ES is Nasdaq. Oh man, these are not that convincing here. It seems like this is facing, and I think it seems like the ES is holding this market. You think? What about Nasdaq? Nasdaq is also the weekly right there. Oh, look at it. Oh boy, this market can go higher here. Okay, here as well is checking. Here there may be some spike to take this one and then come back here. Some sideways trading here. Weekly. It has potential to the upside. What about the Dow? Let's check the Dow. Yeah, this is not that clear as the other ones. You have 100 there. What about the Russell? It seems like the ES is holding the market. Nasdaq is the one with more potential. And the Dow is the divergent. When we have divergent markets, the odds of rotation increases. All right. So it wasn't that crazy after all. Look at where this market is holding, right? Look at where this market is stopping. Can you see where it stops? One tick from this overnight high. Who do you think is doing that? If this is some serious buying here, the market will just ignore. I don't. Bigger time frame doesn't care about those references. Again, momentum is the leading indicator. Very simple, but genius observation. Really, really nice observation. The question is, oh, come on, look at that high, man. Look at that high. Now selling coming, selling coming from that reference, being short here, it's just absolutely uh, uh, right way to highly increase risk, right? They also been having success short in this market are very, very low here. Look at the momentum to the upside. The market is stopping at those references, stopping it right at overnight high. Also tells me, right? It tells me who, or what are the odds of this movement of being retraced if something happens, something exogenous happens, right? If we have some sort of catalytic. I'm not going to wait for that, for example, right? I'm not going to put all my hopes in that something may come out of that. Look at where it is right now, getting closer to the 200. Right there, right there, right there. We have 3 there, 5 here. This could be, so we may have something here, a little bit push back here. Having a lot of whites. Not as much as we have yesterday, but the market was going low. Very questionable high though. Something I like from Sierra, it doesn't use too much memory, man. It really does, no? Look at what we have. I have Thinkorswim, Sierra, Rhythmic, my trading platform, Photon Trader, which is from where I have my this window trade, OBS, the streaming, and Chrome, right? Only 49%. I like that. That high is not good. Doesn't mean we are having volume. Can you see the accumulation volume on the upper side? You have volume building up here. The higher it goes, the volume keeps coming. Keeps going higher, the volume keeps coming. It's not that it goes up there, comes back, builds volume, and goes higher. It's not like that. is going higher and volume is coming. Traders are trying to sell the 200. There is nothing here, man. There's no commitment here. The buying that is coming is questionable. The selling is also very short time frame. I wonder if this can be a trading day. And remember, the also rotation are higher for today. But a trading day has not been reduced to 0 here. We have technically, okay, that's not good. We have only one, we have no excess at the high. Very close to the 5900 there. Very close. I wonder to move this POs, this halfback up here. That's 90, 70, that's 13. The market needs to move 26 points to the upside. That would be 13, right? 13 kind of like around, what's 5900? Around this, around here. Around the center. Between this one and this previous level. But these references up here are, notice there are March, right? Those are not relevant now. These are just technical ones. What I am watching here is actually this market now. Let me label. Let me put a default. Let me put a line there. Let me save it. Don't want to lose that information there. Photon trader, save it. Yes. All right. Okay. The momentum is to the upside. Don't step in front of the momentum. Tempo remains unchanged from the opening. It's not slowing down here. Traders are very motivated by this advance, but taking the open line high, taking the 200, next thing 5900. Markets to the upside in all time frames. We have the 30 minutes, we have the daily, we have the weekly, we have the monthly. For this market to change that structure, look at how much it needs to come down here. You know, it has to come. It has to take this low all the way down to here, right? But if I am going to be long here, for example, I'm going long, the market can still come all the way down to here, even back inside this previous day range, right? And the market is still going to be to the upside. So I don't have location here. But that changes if I have a trading market. Trading days are completely different, right? You just jump into a trend. Don't step in front of the trade. This is better taper now. Let's see if we have some more coming here. Notice how volume is coming here now. But how was coming? It was coming here. It came market go higher, keep going higher, builds, keep going higher, builds, keeps going higher. Now it has some advance, and this is coming back and building at the below. This shape here is building to the lower side, and remember what happened here. Probably you have forgotten what happened here. Let me bring it back. Let me bring it back to you so you can see it. Hate this. I don't like to be doing this. Look at this. Remember what happened here. Probably you have forgotten. This low is not good. Yeah? We have the overnight. We have yesterday's pullback, late pullback. We have yesterday's low. We have today's low. Now the next thing, this low. Buying. We may have something to the downside. Maybe here taking this low, extending a little bit just to buy from the overnight high. Within the odds, right? Very, very questionable. You know, I got to be aware, right? When I see that kind of things, okay, if I want to have a loan, I got a loan. Maybe I see an opportunity. I get my position to the upside. I get positioned to the upside. But if I see those things being taken, right, or I understand, right? Those. If I see those kind of actions coming back to overnight high, buying from them, I have an understanding. I may have an understanding what's going on, and I am not going to wait there. If the market goes against my position, I'm not going to wait to close to take a loss. That's for sure, because I understand that who is holding that inventory, right? Who's holding that inventory is not or are not strong hands and may go against me really fast. And this can be frustrating for most people, you know. So what do you do then? You are not a trader. You are not buying. You are not selling. I have 15 trades so far. That's what most people will say. But do an honest assessment and honest evaluation of your record, right? Look at the data of your trading record. If you are profitable, if you are successful, if you have constant, consistent advance or gains, well, that's good. Right? It's good. You keep that strategy and improve it. Works and work in improvement. But if it doesn't work, if I have one day good, 1 week good, and the next week everything is wiped out, so that will tell me, right? There's some flaws there. And if this has been repeating week after week, month after month, year after year, so there's something there that has to be, there's some adjust that I need to do there. Don't expect to have, don't expect to have different results if you keep doing the same. If most people do that, and most people are unsuccessful, don't expect different things. Now we are getting closer to the 5900. What we have after that? We have this vacuum here, this empty area. Let's see. $58.91, 58.91.5, 58.91. Actually, this 200 has changed. Oh, it's right there now. It's because this is dynamic, right? Notice now how this is drying here. There's something coming here. No, but look at what is stopping here. It's stopping right here. Oh boy. What has stopped me from doing anything here is the market checking or coming back inside yesterday's range. There was something there that have noticed. There was this unfinished action from yesterday. As I said, I think this was the key for today. I guess I focus, over focus, I get too much weight to the negative and neutral. Notice where the sailing is coming from. Can you see what the volume is? Look at it. Look how this volume is not building below, but building above, right? As the market keeps coming lower, there is nothing coming. There's whites here. Right? Actually, this is getting higher, above. Really close here. If this is something serious, this market will have not stopped here. It doesn't mean I'm going to go short. Actually, I'm watching to the upside here. I'm wondering if this can be a trending day here. Kind of like maybe like 30-40% lower than yesterday. Notice how this dries, right? We have this part, and notice this part of the profile. Notice how as the market goes lower, how it dries, right? It dries. This is not good, right? All time frames are to the upside. This is good to the upside. I am flat. What kind of bands do we have here? What do we have? What kind of news we have for scheduled for today? We have CPI tomorrow. Speakers, bunch of actions on Thursday. We have PPI, jobless. Oh, by the way, let me check what kind of data do we have. Did we have today? Core inflation, previous 0.1, we have higher 0.2, year over year is the same 2.8, month over month is higher, previous was negative, now we have positive, it went from minus 0.1 to positive 0.2, year over year is lower. Notice where it's being bought from, the 5900 now. Now if you have this kind of short-term trading here, what do you think will be the next thing that we'll watch in the upper side? We got whites. Pretty darn similar, right? Look at that. Really nice. This is Sierra, this is window. Look at that two up there. 13. Do we have a 13? Do I see a 13 there? $58 or $59.50 is the next thing on the upper side. This was something here, no? This thing here, where the market dry here. And as you can see, if you got only bar or candlestick charts, this is going to be really hard to trade. I once tried using monkey bars from Thinkorswim. While it is good for analysis, it's good for homework. I consider this is the most important thing here. We don't have this kind of data, or we cannot see this in candlesticks bar. Even here, right? I can see volume here, but it doesn't tell me at which levels of the bar this volume is. Right? I may have 1 million, but this one is distributed throughout this bar, right? From here to here, and I need to see, what the actual distribution is throughout the bar. I can have something if I use my volume profile. But the next step is this colored, which is based on percentage actually, right? How much percentage the volume at certain levels are relative to the rest of the period. Look at that. Okay, look at that. We have something. We have POC. I mean, hardback coming through to the base of B. We may see this one coming towards here. Well, and that would be, that's 4 points more, maybe 5. And that will move this one down up here. That can be something, maybe some kind of rebalancing once the market, this hardback comes here, or it can be up here as well. Tempo is not that bad, not that good either. We may have a trading day in hands actually. Very elongated market so far. Almost 50 points with a VIX of 17. We may be close to a high. Can we? Based on VIX, right? We may have maybe 50, 75 points range. Let's see if volume gets accumulated here, and then the market keep going higher. Yeah, look at that. Look at that. That is changing, right? This thing is changing. The behavior is changing relative to what happened here, relative to what happened here in this part. Yeah, there's a pullback here, big value or volume here. This market always have, when we have these references, market always have a tendency to always shoot these ones. I'm gonna see if the market comes down here. Volume drives, there were no sellers here. It's coming very close, really close to half back here. Did you see that? And one of the things that can happen now is the mindset, in the mindset of traders, oh man, you have everything nice here. And quickly we can forget what kind of environment we are in. Right? The uncertainty is really high here. Anything can happen at any given moment. A tweet, a press release that can mess with our traders. Right? This behavior is different, right? This one, what's happening here is different than what happened here, and different to what happened here and here. Now there is this volume that we have here. This volume was built when the market was going higher. When the market was going lower here, volume drives. Now this market is having a pullback and we have accumulation here. Right? We are above the 200, above the 5900. Right? Volume building here. This is changing now. There is some kind of change. Hope you can see that. I'm not saying this is negative. I'm not saying that. This actually can be positive, because many times what happens is I got this from Jim, right? And you see this so many times that but until you discover it for yourself, it doesn't matter how many times somebody tells you, you won't learn until you do it, right? This is the 200 moving average. This is the 200. This is 200. It's not rare. It's not rare for trading to get out here. And depending on what the market does, can be today, later today, or tomorrow, the market keeps going higher till re-entering the upper side. They get out here on the lower side, below this one, and re-enter up here. Same goes for the all-time high. Let's say I have an all-time high here, right? Depending on what kind of situations we have, profits or taking or hedging here, re-entering or removing the hedge up there, right? And that can be the case that we are seeing today. Because I'm seeing this behavior here. This is different than what happened here. It's different. What it is, I don't know. I will know that just after the fact. I cannot say it what's happening. Nobody can. But I can see the hardback has not moved up here, nor up here, nor up here. The action remains to the upside. I'm just observing this market now. Okay, I want to see maybe next period here. I want to see next period. This can be relevant for the next period. We are not that much in that far from the next period. Maybe it's just a couple minutes. Actually, like 3 minutes, 4 minutes for before the next period. There can be something here. No? Either the market taking this low or making a stand here. Right? Alright guys, it is 10:26. Unless you have any questions, I'm going to call it a day here for the stream. As usual, I'm going to wish you a very nice trading day. Stay safe. Hope I can see you tomorrow or soon. Very soon. See you.